Right now, markets are full of mixed signals. Everyone is watching inflation data and central bank chatter, trying to figure out if the Fed will pause or pivot. But beneath that noise and uncertainty, something important is happening, and crypto is moving first. Bitcoin, we know, just confirmed a major breakout. Institutions are quietly loading up, and altcoin momentum is shifting fast, with Solana starting to lead the charge, actually. So in this video, I'll walk you through the quiet signals that smart money is watching closely right now, from chart patterns and liquidity flows to macro stress and where capital is rotating. By the end of this video, my hope would be you'll have a much clearer view of what's really moving the market and how to stay one step ahead as the next wave starts to build. So if you're serious about tracking the real signals behind these market moves and not just reacting to the headlines in the news, make sure you stick around for this video. Hello guys, my name is Jessica and I'm so happy you've joined me here today. And without further ado, let us get started with today's content and data. Bitcoin just did something that has traders and everyone alike paying close attention. For months, Bitcoin was stuck under a key downtrend. A long resistance line is what that means. That kept getting rejected. Bitcoin couldn't break out. But this week, something has changed. Bitcoin broke above the trend line, its resistance, and then came back down to retest it. This time, that retest has held on. So in technical terms, what this means, when a resistance level turns into support, right, or like the new level it's going to bounce off of, and it actually holds, that's considered confirmation. It tells traders and everyone alike that the breakout was real and not just a fake out, quote unquote. And when this kind of breakout lines up with what's happening behind the scenes or on a macro political economical level, that's when things get interesting. Because while the charts were confirming the breakout, big money was stepping in. We know that OTC desks, which is where institutions and whales or big investors trade large amounts of Bitcoin so that they don't move the market, right? So that they don't move money on exchanges that can publicly move the market. They are seeing their supply drain fast. And this is a key signal. When balances at OTC desks shrink, or over-the-counter desks, it means large players are accumulating. They're buying Bitcoin off the market and taking it straight into their cold storage. And this has happened before in the past, before bull runs take off. And right now, we're seeing the same pattern happen again. All while at the same time, global liquidity is quietly increasing, as I've covered in past videos. We have here Merlin that's posted a chart that overlays Bitcoin with the M2 money supply, which measures how much cash and credit is in the system. Historically, when liquidity rises, Bitcoin follows shortly after. That's what we saw in 2020 and in 2021. And based off that trend, this dip might already be behind us. It's like all the pieces are lining up. Technical breakout, check. Whale accumulation, check. Liquidity conditions improving, check. And the corporate side is getting louder too. We have MetaPlanet, which is the Japanese version of Strategy, Michael Saylor's company, just adding 319 Bitcoin to their balance sheet. So that now brings them to over 4,500 Bitcoin total. And Strategy, well, they went even bigger, of course. Between April 7th and April 13th, they bought 3,459 Bitcoin at an average price of 82,618. That's over 285 million in a week. That's crazy. And they're buying at these levels and not on deep dips. That means they're not waiting. They're not scared of the price volatility. They see this range as fair value in terms of Bitcoin's long-term price. So now we're seeing that conviction spread because according to BITWISE, corporate Bitcoin holdings jumped 16% in Q1 alone, with 12 new companies joining in to add Bitcoin to their balance sheets. So while retail or the normal investor is still hesitant, of course, we don't blame them. The quiet signals are getting louder, and this has smart money or whales accumulating as much Bitcoin as possible. And corporations are also loading up. The chart is breaking out. And now, as I just mentioned, we have liquidity starting to flow again. And of course, it doesn't guarantee liftoff right away, but the foundation is being built and we cannot ignore that. And in crypto, when structure, sentiment, capital all start lining up, that's usually not the time to fall asleep. It's the time to get ready for action because it signals the parabolic phase of the bull run may indeed be upon us, guys. So next, let's talk about macro stress and policy confusion. So while Bitcoin is flashing strength, the rest of the market, well, not so much. The big picture right now, or the general sentiment in the market, is stress, confusion, and a growing gap between investor expectations and reality. But let's start with sentiment. Retail investors are extremely bearish right now, and not just for a week or two. According to the AAII sentiment survey, more than 55% of respondents have been bearish for 7 weeks in a row. This hasn't happened since 1990, not during the global financial crisis, not during the COVID crash. This kind of sustained fear usually means most people have already sold, and historically, it often marks the major start of major reversals. If we layer onto this some of the major macro signals that we're seeing in the news being covered by Scott Bessent and Lutnick and Trump between this whole China tariff war situation that's still going on, well, I would say trade negotiation, global negotiation. But if we layer that into this equation, foreign demand for US stocks is drying up. Capital inflows from international investors just hit their lowest level in years. And that's a big deal. Foreign investors have been a key driver of US equities, especially big tech. And if they start pulling out their investments, that removes major support from them in our market. And what's driving that? A lot of it comes back to the US dollar, in large part affected by this giant global trade negotiation we're going through right now. But anyway, the US dollar index, or the DXY, has been breaking down hard. It just lost its support at 101, a level it's held since April 2022. And once again, while that may not sound like a big deal, or you may not know what to make of it, it is a big deal because a failing dollar tends to boost risk assets like Bitcoin and stocks. It also lowers the value of dollar-denominated debt, which we need the world to buy. We need them to buy our treasury bonds, which eases financial pressure globally. And if the dollar keeps dropping towards the 95 range, like many traders are expecting, we could see capital start flowing back into crypto, gold, and emerging markets, and most importantly, Bitcoin. And then, of course, there's the yield curve. We talk about this a lot. You may have heard about it a lot on other channels, but here's what's new right now. The curve just re-inverted. It had started to normalize, but now the 2-year yield is back above the 10-year again. And this setup usually signals a recession is coming, but it can also tell us the market is confused as we are living through unprecedented times. Investors don't know if the Fed is about to cut rates, hold steady, or hike again. It's sending a lot of mixed signals, and that's causing the volatility we're seeing. So, on top of that, policy uncertainty is spiking. The Economic Policy Uncertainty Index, which tracks how often news mentions things like rates, trade, regulation, etc., just surged back to pandemic levels. When that index jumps, it means nobody really knows what's coming next. Businesses end up pulling back, investors get cautious, and markets start to swing hard in volatility. And that's exactly what we're seeing. Late payments on auto loans, especially subprime, just hit all-time highs. That's often the first place financial stress shows up because car loans are easier to miss than a mortgage on your house, right? So if this spills over into credit cards and mortgages, it's a clear sign of consumer strain, and that could force the Fed to step in, or who knows, a stimulus. That's just my hunch. And that's where it gets very interesting because according to Cointelegraph, the Fed is absolutely ready to inject liquidity if needed, just like they did in 2012. This isn't a new QE or quantitative easing program, but it's a message. If markets start to break, the Fed is standing by. And for crypto, that's a green light for printing and for the market to just go parabolic, as everyone here, I'm sure, is waiting to happen. Bitcoin has always performed best when liquidity is flowing. The last time we saw signals like this, Fed ready to step in, dollar weakening, retail panic peaking, that was right before the 2020-21 bull run kicked off. So it doesn't guarantee anything, but in moments like this, the setup that seems chaotic can actually become the launch pad for the bull run. So now let's talk about Solana's rotation moment, because while Bitcoin is building strength and macro uncertainty keeps everyone at the edge of their seats, some capital is already rotating, guys. And one name is standing out. That's Solana. So let's start with the chart. Solana just hit its highest weekly close ever against Ethereum. That's not just a short-term pop, it's a signal. The SOL ETH ratio is what traders use to measure momentum between those two ecosystems and tokens. A breakout like this tells us that capital is flowing out of ETH and into Solana, whether it's for faster performance, better yields, or just stronger upside. And the money is moving with it. Over 120 million was bridged into Solana in the past week alone. More than 70 million of that came straight from Ethereum. When that kind of liquidity crosses chains, it's not just traders, it's developers, it's builders, and users, people like you and me, moving too. That's how ecosystems grow fast. It happened with Ethereum in 2020, and it's happening now with Solana. For what reason? Well, the apps are working and earning. Solana native apps are leading the crypto market in revenue right now. The top performer, a meme launch app called PUMPFUN. It's pulled over 10 million in revenue in just 1 week. As much as I'm not the biggest fan of memes, they are a fast way to make money or get entirely wrecked. So I don't recommend it unless it's your throwaway money. Anyway, that means users are spending, creators are launching, and the ecosystem is thriving. It's not just hype, it's actual demand. And that demand drives protocol revenue, which feeds back into the token value. And that's what makes the whole ecosystem rise and the token rise in value as well. So this is what makes Solana different right now. And it's not just cheaper or faster, it's where stuff is actually happening. And now institutions are getting a way in. Canada just approved spot Solana ETFs, and now they go live this week as well. Not only do these ETFs give traditional investors exposure to Solana or SOL, they also offer staking rewards, and that's a huge unlock. It means passive investors can earn yield. They can earn like passive income from day one just by holding the ETF. So this is something Bitcoin and Ethereum ETFs don't offer yet. And while the US isn't there yet, This Canadian approval sets a precedent because we know the US and Canada are competitive and in negotiations right now over tariffs as well. So anyway, if these funds see volume, other countries and eventually the US may follow, and that will be so exciting for you and I. That could push Solana even closer to blue chip status and global portfolios. So what are we seeing in the market right now? We're seeing Bitcoin breaking out, liquidity is coming back, macro signals are flashing, and Solana is leading the altcoin charge. In times like this, markets don't always move in straight lines, but under the surface, rotation is real, and the capital is already shifting toward where the momentum and activity is strongest. I'll keep tracking these signals for you as they evolve and unfold, and I'll be back with updates as soon as the next move starts to form. If you found this breakdown helpful, make sure to subscribe. It helps the channel, and make sure you stay ahead of the market with me one step at a time. I love you very much. Thanks for watching. Please leave me your comments and feedback in the comment section below, because I am constantly improving my channel, but I care so much about what you think. So please let me know, and I'll take it into account, and I'll see you in my next video. Ciao, guys.